What are beneficiary rights? Have you ever wondered what happens to your bank accounts or assets when you pass away? Understanding beneficiary rights is key to navigating this important aspect of estate planning. Beneficiary rights refer to the legal entitlements of individuals or entities named to receive assets from a bank account or other financial instruments after the account holder's death. At its core, a beneficiary is someone designated by the account holder to inherit funds. This designation allows the beneficiary to receive the assets directly, often avoiding the probate process. This can simplify and speed up the transfer of funds. One important aspect of beneficiary rights is access to funds. Beneficiaries cannot access or manage the account while the account holder is alive. They can only claim the assets after the account holder's death, typically by providing a death certificate to the financial institution. There are different types of beneficiaries. Primary beneficiaries are first in line to receive the assets. Contingent beneficiaries inherit only if the primary beneficiary is deceased or unable to accept the inheritance. An account holder can name multiple beneficiaries and specify how assets are divided among them. Age restrictions also play a role. Generally, beneficiaries must be adults, meaning they are at least 18 years old. If a minor is named as a beneficiary, the account holder may need to set up a trust or appoint a custodian to manage the assets until the minor reaches adulthood. Another key point is that beneficiary designations on bank accounts usually take precedence over instructions in a will. This means that even if a will states otherwise, the named beneficiary will receive the account assets unless the designation is changed. Spousal rights can also affect beneficiary designations. In some states with community property laws, a spouse may have automatic rights to part or all of the account assets, regardless of what the beneficiary designation states. For instance, spouses may need to provide written consent to change beneficiary designations on life insurance policies or bank accounts. Beneficiaries are not responsible for any debts associated with the account. If the account has a negative balance at the time of the account holder's death, beneficiaries simply do not receive any funds from that account. For banks and credit unions, understanding beneficiary rights is essential. They must verify the death, confirm beneficiary designations, and ensure proper documentation before releasing funds. Financial institutions also need to educate account holders about naming beneficiaries to facilitate smooth asset transfer and avoid complications during probate. In practical terms, banks and credit unions often offer payable-on-death accounts or similar arrangements. These allow customers to designate beneficiaries easily. Customers can add, remove, or change beneficiaries at any time, usually by contacting their local branch or using online banking services. This flexibility helps account holders maintain control over their assets while ensuring their wishes are honored after death. Beneficiary rights protect the interests of those designated to inherit financial assets and provide a clear legal pathway for banks and credit unions to follow in administering accounts after the death of an account holder.